morning and good afternoon. This is Marco Mazzocca with Common Sense Research, and I'd like to discuss a few issues that I see driving U.S. markets. The first of which is the presidential election and how the Trump tax cuts are not being represented properly in financial media. So when people discuss the tax cuts, they tend to focus on just corporate tax rates and stock buybacks, and they forget about small businesses. And you see, small businesses employ roughly 60% of the U.S. labor force, and that's nearly 70 million people. And small businesses have unequivocally stated that the TCJA has allowed them to expand their businesses and hire more people. So when it comes to election day, it's going to be difficult for this large group of people to be inclined to vote for a platform that is looking to take these benefits away. This could end up being a significant factor in determining who wins the presidency, and it's something that people definitely need to be aware of. Another aspect of the election I wanted to look at is how are people getting information about the election? Because if you're just using mainstream media outlets, you're getting very biased reviews of how the election is going. So what you can do is to go onto social media platforms like Twitter or other places and look at smaller independent media outlets or even smaller independent research individuals who are out there doing the research. They're on the ground, they're out in the field, and they're analyzing the polls. They break down the math that is behind the polls, and they're covering the protests and the riots and everything that's out there. And this is a great way to get local information around the country and just to get a good feel as to really what's going on out there, because as we saw in 2016, the polls and the major media outlets had it totally wrong. So this is where social media can be very important and very valuable if you're looking at the right accounts. And please feel free to contact me to look at my profile on Twitter to see who I'm following, and I'm happy to share that information with whoever. Next up are unemployment claims. And weekly unemployment claims are a great way of understanding how the shutdown is still affecting the economy. And so what we're seeing is the overall picture is actually improving, although we remain at very elevated levels. See, back in winter and spring, initial claims were averaging, north of 2.2 million initial claims on a week. That number has now come down to roughly 847,000 average over that was through August and September. So that's a great improvement. And continuing claims have also come down as well. However, given that the weekly initial claims are still very elevated at this stage of the reopening, it is much more probable that these claims, that these job losses are more permanent in nature, and that could be a very, very tough problem for the economy to get over. Inevitably, it's going to lead to more stimulus, but we still have to keep a laser focus on these weekly unemployment claims. And on my Twitter feed, I put out a great weekly chart on claims data, and I have a lot of other information there that you can get on my blog, Common Sense Research, or just follow me on Twitter for some great stuff. Also, in terms of market valuations, we're seeing that dips are still getting bought. So regardless of the presidential election, regardless of Fed policy, the major accounts out there, the Fidelities, the BlackRocks, the Vanguards, they still have a mandate to buy stock for their clients. Okay, all these retirement accounts out there that are indexed to the S&P or any number of major indices still have stock to buy, and they're still buying it. Which is why when Trump came out Tuesday afternoon and pulled the plug on stimulus talks and the market dropped, we're here now Friday morning and we're back above those levels, and the dip is gone, the dip has been bought, and that's where we're at. So people still have stock to buy, so the market still has a good bid to it, and things are trending up. And for anybody that wants to follow me on Twitter, I put out some index levels that I convert from futures markets into the ETF equivalent prices, and you can get some great trading levels off of that. And so please give me a follow, and I hope everybody has a great day. Thanks. Bye.